Know us, we're the State Association of Nonprofit Organizations in Maryland. We are ourselves a 501c3 organization and a membership organization. So our 1,200 members pay dues, we thank our members for supporting this webinar today. Maryland Nonprofits provides resources for organizations and advocacy in the state of Maryland for all of the issues that are important to us collectively. We are the home of the Standards for Excellence, which is an ethics and accountability code of conduct. We're also home to the Nonprofit Development Center, which is a program funded by the Department of Commerce, and it is designed to assist organizations that are younger than 10 years old and that have gross annual receipts below $750,000. We offer consulting services to our members and not to our members, and we are just really happy to have you all with us here today. Any of you who are members, you know about our emailed newsletter. If you're not members, we invite you to sign up for our email newsletter and to join Maryland Nonprofits. If you go to our website, you'll see a committed COVID-19 webpage about what nonprofits need to know about coronavirus. Also, you can see our upcoming events, both for members and non-members, and gather other news from the sector. Today on the call, we have 4 Maryland Nonprofits staff members, actually 3. Unfortunately, Heather Iliff, our president and CEO, will not be able to join us. And we have 3 guests from outside of Maryland Nonprofits. Let me just welcome in order Colleen Luzier, who is the founder and president of Luzier Consulting, formerly HR Solutions. Also, Rob Cannon, a principal at Gorgas & Company Insurance. Rob and Gorgas have been our partner broker to Maryland Nonprofits for about 20 years. And also Adam Thorne, the Director of Operations at UST, our HR and Unemployment Support Group. So thank you all for joining us. Also on the line, Henry Bogdan, our Public Policy Director, Carmen Marshall, our Director of Consulting, and me, Maryland Nonprofits General Counsel. We have a really ambitious agenda for the day and hope to be covering all that you see in front of you here. So I'll just mention briefly about Governor Hogan's executive order what I hope the bulk of our conversation today will be about will be human resources, unemployment insurance, the various relief grants and loans that the federal government and state government have been making available to businesses, insurance and employee benefits in the context of COVID-19, and very importantly, the diversity, equity, and inclusion considerations that employers will need to be making in the context of furloughs and layoffs. If we have time at the end, I will touch on some compliance matters and extensions that the state and federal government have been making available to businesses. I'm not going to go into any detail here, but I invite you all to look at the governor's website. He lists on it all of the executive orders that have come from the last couple weeks of events related to coronavirus and the COVID-19 disease. The websites are at the bottom of this screen. The executive order that seems to have captured the most attention from our members and nonprofits more generally is related to essential businesses. So what is an essential business? The governor has provided some guidance about this. Direct services are protected. So you've all started to experience in just your daily lives now that some of the essential businesses that have remained open include healthcare and law enforcement, anything about necessary services to the citizens in the state of Maryland. Government is staying open, food, energy, water, transportation, and importantly, daycare centers. Specifically as regards nonprofits, there are a number of judgment calls that are being made about what is and is not an essential business. So in the guidance that the Governor's Council has provided, which you can find on his website, really does boil down to the fact that determining whether or not your nonprofit is an essential business is a judgment call. And he provides some guidance about looking at other organizations that are like yours and determining whether or not the services that you provide are related to the basic health and good health of the community. With that, I'm going to turn it over to Colleen, who's going to be addressing human resources considerations. Colleen, you have to unmute.
Okay, how's that? Can you hear me? No?
Yes.
Am I?
We hear you.
You hear me? Okay, great, thank you. I got a little worried there when there was silence. Hello, everybody, and I'm going to try to cover in the next 5 slides some things that are very important during these uncertain and every hour changing times. In terms of human resources considerations, for most workplaces that are going through telework or employees working from home, there's certain things that pop up as needing to be addressed. So I tried to make a list of some of those things here. Active listening is extremely important right now. They say that 93% of what we say is nonverbal. So when you're on a webinar and you can't see the people you are talking to and how they're reacting, they are going only with your words. So you need to be careful in terms of your word choices. You need to think about your tone, you need to think about what you're saying explicitly, and you need to think about what might be implied in your word choices. And you probably need to check for clarity and questions at different times when you're dealing with your employees. So just sort of be very thoughtful about your word choices when you are having a conference with your workers, your coworkers, etc. The other thing is that for a lot of your employees, this may be the first time they're working from home or the first time they're working from home on a full-time basis. And it may be for many of them the first time they have their children home because the childcare or the schools could be closed. So encourage your employees to set up a separate room if they can in their home, to if they have a partner that they can trade off with in terms of who's sort of making sure that the house doesn't burn down while they're at work, but to have a workplace and a personal life place, because it's going to be very easy to blur those boundaries between the two, more so than usual. And these times are stressful enough. In terms of work logistics, all of your employees may not have everything they need to work from home. Maybe at their work desk, they have 2 monitors, and at home, they have 1 that they could be sharing with other members of the family. So do you as an employer need to be providing those things? And will you get reimbursed from the government if you do provide those things? And yes, you will. The laws have been passed, but it's going to take a little bit of time to get it all in place. Do your employees have conference call capabilities? Do they know how to use them? Do they need a printer? If the employee goes out and buys something, will the employer reimburse them? These are all things to think about. The other thing is that more may be done via email than usual, not just between your employees, but also with your clients. So again, tone is important, word choice is important, people may be rushing, miscommunication can happen far easily. So I am suggesting that if it's a critical communication, either internal or external, you have at least one other person read it before sending it out. And if you don't already have some kind of guidelines for client communications, and many organizations do in their policy manuals, this would be a good time to create them or to remind people about them if you already have them. Okay, why don't we go on to the next slide? Another thing that might be coming up for your employees is perhaps they are now due their annual performance review or their annual salary review, and they might be thinking about it. You may not be thinking about it, but they might be thinking about it. So you need to let them know, just address it. I know normally in March we do these things. I know usually in April we discuss a COLA if it's going to happen, but this year we are postponing it. Communication is really super critical during a time like this. And the employees may want to say, okay, I understand you're going to postpone it, but will it be retroactive back? And again, that's something you should think about and have an answer before you address this issue with their employees. What about hiring for vacant positions? Maybe there was a vacant position and then the next week everyone's on telework. What is this doing to the workload? Do you oddly enough need to go forward and hire somebody right now? Or is there a way of prioritizing the work so that the workload is not overwhelming for anybody? Would it be useful to your employees to create some kind of a buddy system so that even if you have a weekly check-in using GoToMeetings or using Zoom or one of the other tools out there, but maybe you could ask employees to form a buddy system, or maybe you can develop a buddy system and share it with employees and have them check in daily or at least several times a week. Another idea to keep the communications going and to keep employees feeling that they are part of the organization, even if they're not coming into the office every day, is utilizing the technology that's out there. My son works for Ernst & Young in Atlanta, and he told me that his team is having a virtual happy hour every week on Friday afternoons. And they all sit there with their glass of wine or their beer or their iced tea, and they just talk to each other. It's a virtual happy hour. You could also do something like a brown bag lunch, again, having employees that are interested in the topic come in. And you can ask employees what would be useful. It might be you've got a group of employees that have elementary or primary school age children, and maybe they should get together and share ideas of what they're doing to keep their kids out of mischief and focused on what they need to be focused on. So that's another idea for keeping in touch with your employees. And I think it's also very important to have a safe place for employees to share their concerns and to protect their anonymity, but to what I call keep an ear to the ground. To maybe you want to appoint the executive director, maybe if you have a human resources person, they could be the person who employees could send their questions to. Maybe you could have your IT person set up an email that's, just a general email, but that the executive would see the questions and then would address them. So that's just something to think about. All righty, let's go on to the next slide. Which is going to be dealing with the operations have slowed down, and now what do you do? Now, everything I just said about human resources considerations can apply if your employees are all working from home. However, many employers right now are looking at having to either lay off some employees or furlough some employees. So I want to talk a little bit about that difference, and then share something called a work sharing program, which is through the Maryland Unemployment Office. So layoffs are generally used when an organization has a budget issue, has a lack of work, maybe they need to right size themselves, and there's no specific date. Oftentimes right now, in today's circumstances, more and more employers I'm seeing are calling the employees they are basically terminating because they don't have work for them. They're calling them they're being laid off. Now, that's really up to you how you choose to use that term, but employees that are laid off and have no set return date can certainly apply for unemployment benefits. And if you anticipate a return to work date and you want the employee to keep you in mind as their first choice for when they return to work, then you may want to continue their benefits. And by benefits, I mean really the health insurance and possibly their life insurance policy. So what many employers are doing, because they really don't want to lay off their employees, is they're doing furloughs. And furloughs traditionally are a short-term layoff or a partial layoff, and usually it's for a set period of time, usually not longer than 60 days. These are unknown times right now, so we're not sure if it's going to be 60 days or 90 days or 120 days, but you can still use the term furlough for employees. When an employer does a furlough, usually there is an expected return to work date. It is shared with the employees, and generally the employers pay for the health insurance during that time. If this is a business hardship, certainly that is something that is optional for them. However, they are able to get reimbursed for the benefits that are paid through some of the many acts that are coming through Congress right now and through the state of Maryland. So what I think the state and the federal government is trying to do is to protect employees' jobs, protect their benefits, and make it possible for you as an employer to get back the talent that you don't want to lose at the end of our current sort of crisis situation. You can also furlough employees either full-time or part-time. You can say all employees in the next 2 months must take 2 weeks of unpaid leave. And that's how we're going to save the money to keep a job for everybody. All right. Employees are entitled to apply for unemployment benefits when they're furloughed. Okay. You can also, in a furlough, say, I'm reducing everyone's hours by 20%, 30%, 40%, whatever you need to do. So they're partially furloughed, okay, but they still will have some work. Now, something to consider here, and I can't get into the details, but you need to be aware of what your benefits plans allows. Will it continue to allow employees to be covered if they're furloughed? And will it depend upon the amount of time that they're furloughed? Will it depend upon the number of hours they're working every week? So as you can see, there's a lot to be considered there. I'm going to kind of skip over a reduction in force because I don't think that's really what's going on right now. Generally, that's for a different set of economic circumstances. And I think what we're dealing with right now is hopefully, knock on wood, short term. Now, I do want to talk a little bit about a work sharing program, which is through unemployment. And you will see there's a website there that you can find out more about the work sharing program. And there's a very nice set of questions and answers. So let's go on to the next slide. Okay, work sharing. This is something that you can reduce an employee's hours by any percentage that you feel you need to do. And they can collect unemployment at a rate of 60% for those hours that or that percentage of time they are not working. So if an employee normally works 40 hours a week and you reduce them to 32 hours a week, then they, for that 20% that's been laid off, or you were using the work sharing unemployment, they would get 60% of 20% of their pay up to the maximum weekly benefit, which is right now, I think, $430 a week in Maryland. you can reduce the number of hours at any level. It can be a 60% reduction, a 50%, a 10%, a 20%. But you do need to reduce the hours for all employees equally in a business unit. And I'm going to talk about that a little bit more on the next slide. I realize I've jumped ahead of myself a bit here. No, go back to the previous slide. Sorry, thank you. So there is a COVID-19 layoff aversion fund that can supplement the income that you're paying to employees and the benefits that you're paying. So again, there are many laws that are being passed. Things are changing by the day, by the hour, and there are resources that will be available to help you. Some of the advantages of work sharing versus a furlough is that you really are keeping all your employees working, just maybe not at full time. It preserves your trained and skilled staff. It can keep your productivity and the quality of work that your customers, your clients, your stakeholders are used to.
Colleen, you're muted.
Okay, I don't know how that happened or what happened. Can you hear me now? Yes. Okay, I'm sorry. Where did you lose me? Do I need to repeat anything? Somebody nod. Patty, can you hear me?
No. I think you're fine, Colleen. Just keep rolling.
Okay, sorry. All right. So I was talking about the advantages to work sharing. It does help morale if everybody feels they still have a job. It continues to build that sense of we're all in this together, that sense of team. Okay, next slide. Okay, I think I've covered this somewhat, but unemployment benefits can be prorated equal to the percentage of the reduced hours. So if you reduce an employee's work schedule by 30%, then they would get 30% of 60% of the weekly wage that they would normally get, up to a total of $430 per week. You must apply for the work sharing through the state unemployment office. And again, I refer you back to that website on the previous or two previous slides. You can do both full-time and permanent part-time, not temporary part-time workers. A worker can say, no, thank you. I don't want to participate in this work sharing. I just want to file for unemployment, and that is their right. They can do it, but you must have at least 2 employees involved in the work sharing. The other thing that I referred to just a few minutes ago was that in a business unit, you must do the reduction of hours the same for all employees in that business unit in a work sharing program. So if an employee is if you have 3 employees in the fundraising department, they must all have the same percentage cut. But for your 5 employees in your accounting department, they could be cut 10% or they could be cut 50%. So it just must be the same for all employees in the same department. Okay, and finally, if an employee has paid, accrued paid time off, accrued vacation time, or sick time, they can use that if they like during this work sharing. And then those weeks they would be getting their full pay. And so they would be waived from getting the work sharing payment that week. As an employer in a work sharing program, you will be doing weekly timesheets for your employees that both they and you need to sign off on. I know I'm out of my time, so I will leave it at that. I hope this was helpful to people.
Colleen, thank you so much. And we're just going to move as quickly as we can now. Adam Thorne, Director of Operations at UST, take it away.
Hey, thank you, everybody. Really happy to be here today. Hope everybody's staying safe and sane. To Patty's point, I'm going to move at a pretty brisk clip. And I think that's fine in this context because honestly, the main thing that I would emphasize for everybody right now is you really want to be watching this space. I think the two critical things to appreciate about unemployment in this context is number one, the unemployment system in these circumstances is being asked to do something very different than what it typically does. So typically the unemployment system is designed to provide a temporary bridge as people search for a new job. It's really geared towards ensuring that those who are collecting benefits, lost a job through no fault of their own, are actively seeking new employment, are ready and available to work. So a lot of those considerations you're going to hear in the next few minutes have more or less been tossed out the window. The bill that just passed the Senate and is expected to pass the House includes a ton of language that, if I paraphrase very broadly, essentially says, if you wouldn't normally qualify for unemployment benefits, right now you qualify for unemployment benefits. So I just want to kind of put that caveat out there because the other really relevant thing here is that the unemployment system is very highly federalized. So although the federal government sets guidelines and specifies in broad strokes what the expectations of the unemployment program are, the states are the ones that really have to interpret and implement those measures. And we're going to see in the next couple of weeks that what that looks like state by state is likely to vary quite a bit, both because state interpretation is going to vary a bit, as well as because, frankly, the volume of claims activity is just totally unprecedented. Last week, there were 3.3 million new unemployment claims filed. To put that in perspective, at the peak of the last recession in March of 2009, we were seeing less than 700,000 unemployment claims filed per week. So 3.3 million is about 5 times higher than the last previous record, which was in the early 80s. States are very strained right now. And so the impact of this legislation is likely to be messy. But having said all that, there's a couple of things that are really worth focusing on. One, I'm seeing a comment about SBA disaster business loans. I just want to acknowledge we do have some more content after me that talks quite a bit about loans and things like that. So if I don't touch on that, stay tuned. I know Henry's going to be picking that piece up. So the thing I would emphasize first and foremost about unemployment is that a lot of times employers start to get very apprehensive that the decisions they've made as an employer are likely to impact the benefits that their employees can receive. Frankly, even under normal circumstances, the limitations on wage and salary earners receiving unemployment benefits are pretty narrow. Even under typical circumstances, if you have an employer that's reporting wages for you in your state, you're going to be eligible for unemployment benefits if you find yourself out of work through no fault of your own. Employers that are explicitly religious entities, and I mean churches, not just nonprofits with sort of like a faith-based motivation, and employers with less than 4 employees would generally be exceptions to that rule. But as I said a moment ago, the legislation that's just passed really makes those exceptions moot. Even people with insufficient work histories or people who are independent contractors, people who just generally would not be able to participate in the unemployment system, the federal legislation going through this week is really designed to broaden that as much as it possibly can. Essentially, language is in there repeatedly that is intended to provide benefits that people we would normally consider excluded. But even under typical circumstances, most people are actually in the system. Really important on that front is that, if you're concerned about, your status as an employer, if you end up over the next few months having difficulty making unemployment tax payments, if you're a reimbursing employer and you face difficulty making your reimbursing payments, none of that stuff has any impact on the employee. And so, while that may not be where your focus is, it's really worth just emphasizing for everybody that by and large, individuals who are out of work for virtually any reason related to COVID-19 are intended to receive unemployment benefits right now. Now, the really essential thing about the COVID-19 response, and I think probably the thing that's most atypical for unemployment claims, is that people are not expected to look for work right now. And so that's probably the single biggest distinction around unemployment claims compared to what a typical unemployment claim looks like, is if you're out of work for any reason related to COVID-19, you're eligible to receive benefits without any obligation to be out there looking for new employment. I have the word pending in here a couple of times, and it is still technically pending, but we do thankfully have quite a bit more clarity with the CARES bill having passed the Senate. There are fewer outstanding questions. And so just before we move on to the next slide, I want to touch really heavily on this last point here, which is, I'm sure everybody's seen in the news, what Chuck Schumer has referred to as unemployment on steroids is a federal program to add $600 in weekly benefits for unemployment recipients for up to, it's 13 weeks, it's 4 months now, through the end of July. And the relevance of that, I think, is probably the piece that we are most going to see a lot of questions around over the next couple of weeks. I think the thing that is probably the biggest outstanding question is that up to $600? That is not how the bill is worded. And so throughout the bill, there's no reference to scaling. There's no reference to any kind of calculation relative to benefits or wages. If you are receiving an unemployment benefit check, you are intended to receive an additional $600 per week. The states can choose to provide that payment with standard unemployment benefits that are being awarded, or via a separate mechanism, but it has to be on the same weekly schedule. So $600 in additional unemployment benefits per week are prescribed pretty much across the board. And I'd say, from what Colleen said a moment ago, the piece that's probably most sort of confusing in that regard is it's pretty clear how that affects folks who have been laid off. It's pretty clear how that affects folks who have been furloughed. There is no mention anywhere in the bill of work share or short time programs. And so I think that's probably one of the biggest outstanding questions, is how that unemployment on steroids program is going to dovetail with those work share programs. Next slide, please. So this was also mentioned. I think, really the takeaway in terms of keeping your employees compensated either directly or through state programs is that as employers, you just have a ton of options right now that have not been available in the past, that are specifically crisis response options. And so at both the state and federal level, there are several programs that are designed to give employers options for covering payroll and benefits, for purchasing resources to support remote work, for all kinds of creative solutions that are designed to keep people compensated and actively working to the fullest extent possible. So if that's where your priorities are, you have lots and lots of things you can look at before necessarily having to get to the point of furloughing or laying off workers. Importantly for employers, you cannot terminate anybody right now because they've been isolated or quarantined. And I think there are a number of sort of similar considerations that employers should be aware of that impact some of those employment decisions under the current circumstances. And, repeating myself just a little bit, I think, it's really worth just emphasizing the fact that unemployment benefits are triggered when wages drop below a certain level. There are a number of nuances under normal circumstances. There are a handful of exceptions. But I think the really key takeaway there, sort of echoing Colleen's point, is, don't assume that if somebody is formally still quote unquote employed, that is actually the relevant consideration of whether or not they're eligible for unemployment benefits. If you're laying people off, if you're furloughing them, even if they're expected to return to work, they're normally eligible for unemployment benefits and under the current circumstances, explicitly eligible for unemployment benefits. The other major thing related to nonprofits specifically, and where I'd like to spend the last couple of minutes focusing my attention, is Nonprofits, 501c3 specifically, have an option for funding unemployment that's unique. Most employers are required to pay unemployment taxes based on the wages that they report. 501c3s are allowed to reimburse for unemployment. And so what that means is, from the employee standpoint, they'd never know the difference. They still go to the state, they file their claim the same way, they get their benefit checks from the state. From their standpoint, they would never know that their employer is reimbursing. But the distinction for the employer is that instead of that employer paying unemployment taxes based on reported wages, that employer reimburses their state dollar for dollar for the unemployment benefits that their employees receive. So in a circumstance like right now, that's a pretty intimidating prospect. So a couple points of clarification. Number one, any benefits that are federally funded are not reimbursable. So the $600 in additional weekly benefits that are getting paid out, those are not going to be the responsibility of reimbursing employers. They are only responsible for the regular state unemployment benefits that are paid based on standard eligibility. Number two, the CARES bill has said explicitly that states are being guided to provide as much flexibility as they can in recovering reimbursing payments. So that includes things like the applications of penalties and interest, the timeliness of payments. The CARES bill is calling on states to really recognize the potential impact on reimbursing employers in these circumstances and work with them to the fullest extent that they can to ease the burden of reimbursing for those charges. And the final piece, which is probably where there's still a lot of questions on this front, is if you are a tax-rated employer, the bill essentially stipulates that the claims activity that you see as a tax-rated employer during this time is not to be assessed against you when it comes time to recalculate your unemployment tax rate. In other words, normally your effectiveness as an employer in managing turnover and limiting unemployment claims is rewarded by giving you a more favorable unemployment tax rate and vice versa. Right now, unemployment tax rates are shielded from the implications of the claims activity that we're seeing resulting from COVID-19. For reimbursing employers, it's a bit more ambiguous. So what has been said in the CARES bill for reimbursing employers is that the federal government will reimburse the states for 50% of the charges that reimbursing employers incur as a result of this crisis. So by default, that implies that states would be charging those reimbursing employers for the other 50% of those charges. I think right now, the safest thing to assume is that is the burden that reimbursing employers will ultimately face, that they'll be responsible for 50% of those claims charges. But I do think that even if that's where we end up, which is far from certain, there's lots of opportunity at both the state and federal level to legislate further relief on this front. There's nothing keeping them from coming back to this if they find that it's causing a bigger strain than they anticipated. But if you do assume that you're responsible for 50% of unemployment benefits, state unemployment benefits paid to your employees, I think one important thing to keep in mind that would typically be a strain on reimbursing employers is that in most normal circumstances, you would be responsible for those reimbursing charges and also responsible for the wages of the individual that replaced that person who's on unemployment. In this instance, I think to Colleen's point, a lot more employers are looking at situations where the folks who are filing unemployment claims have not been replaced. So there is a bit of a slightly different cost consideration applied by that. So, going on to the next slide, I think is sort of the last thing that I would really stress and emphasize for you guys, which is really watch this space. Like I said up top, the states are going to have a lot of say in what this really looks like in detail. And federal legislation is not going to have procedural process details that really fill in a lot of the gaps here. There's also, I think, worth recognizing so many different forms of economic relief out there right now. Last week's bill included paid family medical leave obligations that were new for a lot of employers. If you are receiving sick or family medical leave pay. You're not eligible for unemployment benefits. So those types of choices as to whether or not you want to treat somebody as, temporarily not working and receiving something other than regular compensation, sick or vacation pay, those are choices that factor in here. And the last thing is that this legislation went through extremely quickly. And so it's very, very prudent to expect that you're going to see a lot of discussion in the next few weeks around what gaps the legislation that's been passed so far has left, and efforts to work to try to shore that up and address those. So that's drinking from a hot fire hose a little bit, but as much as we know right now as to what's going on in this space.
Adam, thank you so much. I really appreciate your thoughtful consideration. And I know that there are a lot of questions, and I'm sorry that we can't address them while we're going through the material. And in the interest of time, I'm just gonna make mention of this next slide, which relates in more detail to the Layoff Aversion Fund, which is a Maryland Department of Labor effort to reduce the strain on employers. It provides up to $50,000 in relief for employers with fewer than 500 employees. And the Department of Labor is accepting applications now through 30 days after the state of emergency ends. You're going to get these slides. You'll see what kind of uses are and are not acceptable, but basically anything that will assist in having your workers stay busy at home or in a clean workplace if they're staying there. Then Henry, I'm going to pass it over to you. Henry has a ton of information to share with us today about the variety of relief grants and loans that have been made available recently. Henry?
To this, right now the thrust of what's going on is a focus by government at the state and the federal level. Most of the resources are at the federal level to try to keep people working and, if possible, inject as much money as they can into the economy. So just that's kind of the theme here. Last week, Governor Hogan had a press conference. He announced several programs. There was a $75 million business assistance loan that was not available to nonprofits, but they also created a $50 million Maryland Small Business Emergency Relief Grant Fund, and that is available to nonprofits, and that's what this slide lays out the basics for. These are intended, you'll see one of the conditions they listed was you're expected to seek longer-term funding. This is intended as a short-term fix. Grants up to $10,000, up to 3 months of operating cash expenses for your business. You have to be in good standing with the state of Maryland. I'm interpreting that as meaning you are in good standing either as a Maryland corporation or as a registered foreign organization doing business in the state of Maryland. That's your registration with the State Department of Assessments and Taxation. Annual revenues under $5 million. In the application process, you have to submit documentation to do that, to show that. You can use the money for working capital, payroll, rent, mortgage payments, utilities, similar expenses that occur in the ordinary course of business. You're expected to seek funding from other sources to go forward from this immediate emergency assistance. And you're going to be asked to demonstrate some form of financial distress or interrupted operations. It can be a drop in revenues, loss of charitable contributions or grants, for example. Go on. And link to the program at the bottom, it's an online application. And there, I should say something at the outset about all of these relief programs. Things are very bad. Very many people are looking for relief. I think 2 or 3 days after that program went up, we were in touch with the Department of Commerce, and they had, I think, 8,000 applications. So I'll come back to that. The federal paid sick and family leave. This is pretty much summarized here. The sick time, you have 2 weeks this is federally required, federally compensated. Employers are going to be compensated for this. This is on top of other sick leave that you may grant under labor agreement or under state law as we understand it. That's indicated in the guidance we already have. I have emailed the Federal Department of Labor to make sure that that's the right interpretation, but that is the plain language of what they've put out. So when you read paid sick time and regular rate of pay in regard to this, you have to remember that there are caps on these. It's regular rate of pay up to $511 per day, max of 10 days. Sick time at 2/3 of regular rate of pay, capped at $200 per day, but can go for a longer length of time. And finally, family leave, 2/3 regular rate of pay, again, the $200 cap. I mean, this is all coronavirus related, and you are entitled to an additional tax credit during the period of that leave if you maintain health insurance coverage. So the next slide talks about these tax credits. There have been some changes here in how we understand them. When we initially saw these in the bill, it looked like these were tax credits against the employer's FICA responsibility. But your reimbursement is supposed to cover 100% of the benefits you pay out under those leave provisions. If the amount of benefits is in excess of your tax liability, it will be refunded. And as I mentioned, saw on the previous slide, health insurance costs that you maintain during the leave period can also be included. You won't have any payroll tax liability for the benefits paid. And self-employed individuals, as with the UI benefits, now there are provisions here that allow self-employed individuals, 1099 employees, consultants, independent contractors to receive an equivalent credit. How will you get reimbursed? Well, there's a quote there from the DOL guidance that came out last Friday. You are going to be allowed to retain in your own pocket payroll taxes you would otherwise be paying to Treasury on a dollar-for-dollar basis against the credit you have earned in paying these benefits. Where you're owed a refund, they're trying to find a way to get you the money as quickly as possible. They don't want you to have to wait until the quarterly filing is made. Payroll taxes, the understanding now has been greatly expanded. Again, part of trying to get money out as fast as they can shovel it. Payroll taxes available for you to retain as part of receiving your credit benefit will include your entire employee base, federal income taxes withheld, employee share of Social Security and Medicare taxes, your share of Social Security and Medicare taxes, as I said, with respect to all employees. The link there at the bottom is to some pretty detailed guidance that came out last Friday jointly from IRS, Treasury, and the Department of Labor. This is supposed to be in effect by April 2nd. Right now, DOL is still writing rules on aspects of the leave program. In fact, there is still an open online conversation or dialogue, as they refer to it, for you to post questions about the questions you have about how this is going to be interpreted. We can roll forward. Most of the money that's going to come down in financial assistance is federal. The existing disaster assistance loans are what I'm talking about on this slide. This program is available now. In fact, it's been available in all counties of Maryland since last Friday. These are loans up to $2 million to small businesses defined up 1 to 499 employees. The definition of an employee is anybody on payroll over a certain period of time, whether it's part-time or full-time. You can use, again, this money, as with most of these programs, we're talking about your basic operating expenses, debts, payroll, accounts payable, other bills that can't be paid because of disaster impact. Now, many of you may have not dealt yet with the SBA in terms of financial assistance because most SBA programs do not include nonprofits. Well, now that rule is off. At least for this program, the interest rate for nonprofits is going to be 2.75. It's a higher interest rate for for-profit entities. The SBA offers loans with long-term repayments, etc. You see that on the slide. This is the existing loan program. We don't have anything yet that tells us, until we get through the 1,200-page bill, how this relates to the new disaster loan program, emergency assistance that's coming down in the Senate bill. But I'm going to go to, if we think the next slide, we're going to talk a little bit about that. As Adam said earlier, now that the Senate bill has passed, we're pretty certain about at least some of this language. This is a description of the $350 billion small business emergency loan program created in that bill that we expect to have pass the House tomorrow. That's a lot of money. There are a lot of small businesses. Again, I think being timely and getting in the queue for this will be very important. These are emergency loans up to $10 million for eligible nonprofits and small businesses, cover costs, payroll, operations, debt service. Sounds familiar. You had to have existed on March 1 and had paid employees. Again, I stress here you're counting full or part-time, not FTEs. If you're eligible, even though you're maybe receiving Medicaid payments, earlier versions of this bill and a lot of language indicated that you would not be eligible. That's out. You are now eligible. Again, what you can use the loan for. Really important here is loan forgiveness. These loans may become 100% grants for many employers. If you maintain your employment between March 1 and June 30, you can have the entire loan forgiven. If you have laid people off or you lay people off, my understanding, without having read the fine print yet, is that there would be a proportionate reduction in how much can be forgiven. This program is going to be implemented through private lenders. This is being rolled into what's known as the 7A program under the SBA. Again, many of you have probably never dealt with something like that. You have dealt with lenders probably. And I've got a pop-up blocking my own screen here. Under this program, they are still going to relax underwriting. Our understanding is that there will be no collateral requirements, for example. They want to get money on the street. It'll be expedited processing. Again, they're still writing the rules. I'm stressing for nonprofits at the bottom there, if you're not familiar with SBA processes, you should identify potential lenders now. You may already have relationships with an SBA lender, 7A lender. I've put a link there. You can download where you go to that. That's the Maryland district of the SBA, and they have a PDF there you can download that has a list, 4 or 5 pages long, of banks and lending institutions that are certified SBA lenders. I think you ought to get ready and be ready to move now. Next slide, just very quickly, other elements of the Senate bill. Many of you have already received or will receive from us a summary of the bill prepared by our National Council that we're circulating. We can also make that available to people who are other people, non-members who are participants on this call. Just quickly, other programs. There's also a smaller emergency economic injury disaster loan program. No creditworthiness requirements. $10 billion available. You can get checks for $10,000 in 3 days. Now, we don't have more information on exactly how that's going to work. And again, that's going to go very quickly. They are only going to this is just a link to the layoff provisions that Adam mentioned, the reimbursement to nonprofits, employee retention payroll tax credit. We don't know how that's going to work yet, but it's a credit of $5,000 for each employee you keep on payroll under certain conditions. It had to be an ongoing concern and have seen a drop of revenue of 50% from the first quarter of 2019. Now, important to note here, to be eligible for that, you cannot be receiving assistance under the 7A loan program. So there's no crossover there. Finally, on there, you've got the direct payments that are going out to individuals. They want to shovel cash out. Yesterday, Mnuchin was saying this might take them 3 weeks to get this money out. It'll be faster for people if you had a bank reference account listed on your last tax return. And we've already discussed the expanded unemployment benefits. So I think that's where I end.
Henry, thank you so much. And I'm sorry that this is so rushed today. We have just more to say. And before we get started with our next guest, I want to just say, for those of you who can stay with us on the call, we thank you for staying with us. We think this is all such important information to be sharing with you. So I'm sorry, we're going to go a little bit over. If you need to hang up, great. If you can stay with us, fantastic. And with that, let me introduce again Rob Cannon of Gorgas and Company Insurance. And Rob, if you want to take yourself off mute.
Yep, I'm ready.
Great.
Okay, thank you. I'll try to go fast. The stuff that's in writing you'll all get. So right now, there is an open enrollment period for anybody who is uninsured up through April 15. So they don't even have to prove anything, so it's available. COVID testing, it seems like all the health insurance carriers are making this available at no cost to the member. They really want to do everything they can to encourage people who think that they may be contaminated to go ahead and get tested. United Healthcare has come out and addressed the issue which concerns me significantly in terms of whether an employee is eligible for coverage because they're furloughed, they're laid off, their hours are reduced. So right now their approach is that they can be kept on the plan as long as the employer is paying the premiums. If they rehire them, there's no waiting period. Again, all of these things are done to try to do the right thing. If somebody is actually terminated, that creates another open enrollment period so that somebody can enroll in the individual market division. Next slide. Check with your insurance company for your health insurance, your property and casualty insurance. Many of them have said they have relaxed the requirements to pay bills on time, and they're going to consider people's situations. So if you have concerns, call the company and find out what they'll do for you. Next slide. Business interruption, a lot of people are concerned about this. Can we file claims if we are losing income? An example is a restaurant. Obviously, many of the organizations are not going to fit into that, but there are exclusions in a lot of policies for things like communicable disease. So the insurance companies are likely going to say no coverage. However, there's also a requirement to report potential claims timely. So if you have the thought that maybe you are entitled to a claim, go ahead and submit it. The insurance company is going to make a determination, but is that going to be the final determination or is it going to go to the courts? We don't know. This is all unprecedented. So next slide. Oh, and with that, yesterday, Al Redmer, the Maryland Insurance Commissioner, just made a statement that they are not able to intervene and force the insurance companies to cover what is not normally covered under the policy. And what is normally the trigger under business interruption is that you've actually had a direct physical loss or damage to property, and that is what is causing your loss of income. So we're getting no help from the Maryland Insurance Administration. Workers' compensation, the obvious cases that may be covered will be those folks that are medical professionals that are dealing with the sickest people, in our area, and there is a direct connection to work that they can make, but not ordinary diseases of life. So it's also hard to tell where you may have contracted this. So let's go forward. Then we get to directors and officers liability. What if you allowed people to come in? You said that you were essential. People contaminated each other, whatever. You created an unsafe workplace. You were negligent, yada, yada. We don't know. It's still unprecedented, but that's probably the area where you're most likely to have some response, whether there's any coverage for that or just offense. Again, it's all uncertain. So next.
So Rob, thank you. I really appreciate your information today. And last but not least, we can all hear from Carmen Marshall, our Director of Consulting, who's going to talk to us about COVID-19 as an equity issue. Carmen?
Thank you. COVID-19 is an equity issue, and we're going to talk just briefly about how that is and what is our appropriate response. I'll speak plainly. Racism and xenophobia are two examples where we see showing up as an equity issue. Racism and xenophobia are just a simple fact of American life. And that's the case when there is no global crisis. We see it in how groups of people are treated in society, simply in their fight for basic human needs, such as housing, employment, childcare, even treatment in the justice system. We see it in food insecurity in far too many communities. Even if you're in business, if you're an entrepreneur, access to capital and credit can be a challenge. If you are immigrant or people of color, it's part of the American fabric. However, when we get to a crisis, to say nothing of a global health crisis like COVID-19, things can be even worse. And so I'm hoping that we'll be more mindful than ever about equity. For example, when it comes to racism, what I'm talking about are not bad people. What I'm talking about are systems of oppression. Systems of oppression, the way they operate is they prefer one group over another. They lift up one, often at the expense of another. And so in a system that's driven by what we call dominant culture, we want to make sure that we're aware of how white privilege or white advantage might enter into your decision making. These things have infiltrated every single major institution in America, like education and housing, finance. And I'll leave it to you to educate yourselves around diversity, equity, and inclusion subject matter. So how does it show up? How does equity show up in the COVID-19 situation? One way it shows up is in access to information, planning and consideration, communication, participation, leadership, and advocacy. So for example, when we're talking about COVID-19, you want to make sure that you are sensitive to the fact that all of your people have access to information, that they're being considered when they go home to work remotely. Language, as you heard earlier by Colleen, is very, very critical. So you want to be sensitive when you say go home and work remotely. Home represents a lot of things to a lot of people. When you say, well, you could, just draw down from your savings. Lots of working people don't have savings. And so we want to be sensitive and discreet in how you talk to your employees. When there are training and professional development opportunities to keep people working, as you heard, the emphasis on a lot of the relief programs is to keep people working. You want to make sure that that includes all of your employees, that preference isn't given unduly over to one over another. And so will everyone who works remotely have what they need? If you do have to do layoffs, are you doing it according to policies that are equitable? There's one thing to have policies, it's another thing to actually implement them. And so you want to make sure that there's a level of fairness when you look at how people are being treated across the board when it comes to access to paid leave or furloughs or layoffs. Also, you want to make sure that you consider intersectionality. Oftentimes people are affected in more than one way. For example, your employees could be a person of color, could be a senior, could be taking care of a child with disabilities. And so there are lots of things to consider when you think about equity. Next slide, please. We want to make sure, as I said, that when it comes to letting people go, who are you letting go first? Are you showing preference in reduction of hours? Who are you designating as essential? And are you being fair in your decision making? All of these things need to be considered. Also, next slide, please. I've given you some examples of or definitions of racism and xenophobia, and I'll leave it to you to read to those. Next slide, please. And so when it comes to COVID-19, be aware that racism and xenophobia are real, that we are living in a polarized society. And nonprofits have an important role to play when it comes to keeping our communities free and safe of hatred and violence, that we are all on this journey to call on the best that's in all of us to pull together. Nobody's ever seen anything like this pandemic. And so we want to stand together as neighbors, as colleagues, as practitioners and leaders to call on each one of us to be generous and safe and kind. I have every hope that we'll get through this together, and I'll see you on the other side.
Carmen, thank you so much. And the last slide that we have to address, I'm going to do in 10 seconds, and it really relates to some basic business compliance matters and a little bit of silver lining, some more flexibility on the part of the federal and state governments who have extended our tax days and the deadlines for tax payments and other filings. So when you receive these slides, you'll also receive the links at the bottom. We welcome your questions and your stories, and if you can email them to us, we would be so grateful. We're in this together, and we are looking forward to helping you through to the extent that we're able. So one more time, please let me extend our thanks to our external experts today, Colleen Luzier, Adam Thorne, and Rob Cannon. And as always, thank you to Henry Bogdan and Carmen Marshall for your insights and wisdom. So we wish you all that you stay safe, that you stay home, and that you stay hopeful. We're going to sign off now, and thanks everybody for joining us today.